Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. Today, as usual, we prepared a report with analysis on the fundamental situation that we have currently. Well, in general, euro keeps strong positions, and as you know by the recent CFTC report, it has reached a new all-time high. It's 180,000 contracts, so previous top was 150. So it means that market is coming to an area where it reached a significant saturation of the net long position. So hedgers also have increased the shorts. It's just buying insurance against the possible rising on the euro currency. So current situation is really interesting and have few major driving factors in the market. If you would like to know, you could read the report. Here I would say in two words, we have some tricky moment currently. So I don't want to remind you about the technical limitations that euro has currently. So we will talk a lot about the weekly overbought. This market stands in the monthly, weekly major fib level. Is that, as I just said, CFTC position shows the high level of the situation, so market is significantly overextended to the upside. All this stuff stands technical. From the fundamental point of view, we'll see also some, well, not quite warning sign, but a sign that's suggesting that immediate upward rally on the euro could become fragile in the short term. In the longer term, probably we will get upward continuation, but in the short term, take a look what's really going on. After the adoption of the supportive fund for the 750 billion euros that we discussed 2 weeks ago, it was a decisive moment for the euro. Within the following 1 to 3 weeks, every time we were waiting some more active steps, either from the European Union financial representatives or from the central bank, but we've got nothing actually. So after the adoption of this plan, nothing has happened. And that's a bit warning sign, because if you'll take a look at the factors that has put euro higher in the recent few weeks, you will see that all the stuff is based on the weakness of the United States dollar. Because the United States currently has really big problems. So this is the particular moment in the history when all population, all countries should be united at the face of the common hazard. This comes from the CV19, some real difficulties in the political sphere. So the nation should be united, but currently we see that the nation instead is separated, and that's really put the impact on the overall situation. It supports the euro currently, and that's the fact. That's why is the tricky moment is, because rally in the recent few weeks is based not on the performance of the euro currency itself, but mostly in the weakness in the United States. It means that currently this background looks a bit doubtful, and all these some driving factors already is priced in. And well, I said, and I'm not tired to repeat this, that to support on the long-term basis the rally on the euro, European Union has to show the real activity in the foreign affairs and the financial sphere. So bring more stimulus to the economy, support financial markets, supports the employment. So there should be some active steps, but currently we do not see it. That's why, well, markets now is riding on the strength of the factors that is still working, but they are gradually exhausted. So, speaking on the short-term technical situation, guys, we talked about the possible double repo pattern, and actually everything looks not bad. I would just say that this pattern in particular has a bit more risk compared to the common moments when we'll get double repo, by the few moments. Although we have the double repo potentially, it's not confirmed yet, but potentially we have the double repo here. We have There is stretch on the weekly chart. It's already confirmed because market hits the major level at the weekly level, but this is, by the way, just an stretch pattern. But we have at 120 area major targets that has not been reached, and that major risk factor. What does it mean? It means that we could be prepared for possible occasional spikes here, maybe on some news release, on some speeches, maybe somebody will tell something, or even some event could happen. Be prepared that could be some spike here, although it will not become that really dangerous for a stretch pattern because it stands on the weekly and it has significantly not as strict conditions for the failure as a double repo. But for the double repo here it could be vital if you will get some spike right to the 120 area. That is why I think that this pattern itself is really, well, it's more risky compared to common situation. So keep in mind when you intend to take the short position based on this pattern in particular and in general. Here on Friday, although we suggest that indeed could be some pullback, it has happened, but take a look that market hasn't closed below the 3x3. It means that currently we do not have yet the reason for taking short position based on this pattern, in particular this pattern. Because on the intraday charts, those of you who have taken the position based on the background that we discussed on Thursday and Friday, now you could move stops to the break-even and see what will happen. On the 4-hour time frame chart, we consider the double top pattern because actually we don't have something else, and that significantly simplifies our task. Because when you're dealing with a double top, it's relatively simple. It has only one correct direction, and should be to the downside. First, market has hit support neckline, and then it should be broken to the downside. It's only action that will satisfy us. Any deviation from this action, so early reversal, returning back to the top, it will be hints that double top will fail. So no early reversals, no pullbacks here should happen. So it should be straightforward downward action. So if you intend to go short, then you just haven't taken position based on this wash release when discussed it on Wednesday. Now it seems that, well, maybe it makes sense to wait and use some stop sell order somewhere below the neckline, below this level. So when market will break the neckline, it will accelerate lower on the breakout. For the bulls, we consider this confidence support, the 1612, 1630 area, it's confidence support, and in daily, this will be also first flip support. So we could relatively, well, safe to take the long position. We do not consider currently deep retracements because our bot is just cut them out because it let market, sorry, oversold of course. It will just let market to fluctuate somewhere around 115.50, 116 area. So we're not interested currently with these levels. Our trading range for a common week will be somewhere in this level. So that's what we have currently. On the short position, be extra careful, be aware of the possible spike to the 120 area. It's possible. It's a really tricky bearish moment. For taking the long position, well, we consider this level. It's the only valuable support where it could be taking the long position relatively safe, because at least some response to this level should follow. Overall momentum is significant. This is strong support. On the follow time frame chart, this is confidence. It means that with a minor pullback, we could move stops to the break-even, and that will be a relatively safe opportunity to take the long position. So that's what we have in the euro. Let's keep watching what we'll get.